Do you hear that sound? In Silicon Valley, they'll tell you it's the sound of the future, that it's the breath of a new god, born of code and electricity. They'll tell you that artificial intelligence is the rediscovery of fire, the reinvention of the wheel, a new industrial revolution, all condensed into a single year. But if you listen more closely, if you cut out the noise of marketing presentations and the excited cries of tech bloggers, you hear something completely different. This is the sound of money burning, the largest, fastest, and most senseless burning of capital in human history. Welcome inside the greatest bubble of all time, a bubble that makes the tulip mania of the 17th century seem like child's play, and the dot-com crash of 2000 seem like a minor correction. The world is gripped by a collective hallucination. The system's algorithms are set to hide such videos, so subscribe and like right now. It's the only way to ensure the next warning reaches you before disaster strikes. Leave a comment if you're ready to learn what others aren't telling you. CEOs of the largest corporations, from banks to soda companies, repeat two words: artificial intelligence. They pronounce them like a mantra. They believe that if they add these words to their investor reports, stocks will soar and problems will disappear. And stocks are really soaring. The market has gone crazy. Companies that were worth reasonable amounts yesterday are now valued in the trillions of dollars simply because they promised to implement neural networks. But let's look at the mathematics of this madness. Because mathematics is the only atheist in the temple of technology. In 2024 and 2025, tech giants, Microsoft, Google, Amazon, Meta, spent more than $300 billion on AI infrastructure. $300 billion. What did this money go towards? They spent it on buying graphics processors, on building giant hangars filled with servers, on laying cables as thick as an arm. They build factories. They build power plants. They buy up chips for $40,000 apiece, like the hungry buying up bread during the siege. But here's the question no one wants to ask at board meetings. Where's the profit? Where is the money that is supposed to cover these astronomical costs? They tell you AI will increase productivity. They tell you AI will create new markets. Lie. Today, the actual revenue from generative AI is a drop in the bucket of expenses. People pay $20 a month for a chatbot subscription to write them a funny birthday greeting, or generate a picture of a cat in a spacesuit. We built a nuclear power plant to power an electric toothbrush. The AI economic model is broken. To make $1 from AI, companies currently spend $5 on electricity and hardware. That's not business. It's charity for chip makers. The only one really making money in this gold rush is the shovel seller, Nvidia. It became the most valuable company in the world by selling a dream. But what happens when the prospectors realize there's no gold in the river? What happens when they stop buying shovels? We're looking at a classic Ponzi scheme, only here, computing power is used instead of investors' money. Startups buy chips to train models and then sell them to other startups, who will buy even more chips. It's a vicious cycle of hype with nothing inside. History teaches us nothing. In the late 1990s, everyone believed the internet would change everything overnight. Companies added .com to their names, and their prices doubled. Investors poured billions into laying fiber optic cables across the ocean floor. They were right strategically. The internet truly did change the world. But they were wrong about the timing. 99% of those companies went bankrupt. Fiber optic cable, worth billions, was bought back for pennies. The same thing is happening today, but the stakes are 1,000 times higher. We're not investing in wires, we're investing in brains. But these brains can only hallucinate very confidently so far. Corporations are gripped by fear. Fear of missing out. FOMO. Fear of missing out. Google's CEO is afraid of Microsoft overtaking him. Microsoft is afraid of OpenAI. Meta is afraid of everyone. They're running a marathon at sprinter speed, burning through decades of accumulated cash reserves in an arms race that has no finish line. Every quarter, analysts ask, when will profits start? And every quarter they hear, soon. We need to wait a little longer. We need to build a bigger model. We need to buy another 100,000 chips. This is the eternal tomorrow, but tomorrow never comes. There comes a moment when the music stops. Investors are getting nervous. Pension funds that invested your savings in tech stocks are starting to ask uncomfortable questions. The market is overheated to the point of melting steel. Any bad news, any weak report, any hint that the emperor has no clothes, and the collapse will begin. Do you think AI will save you the economy? No. Right now, AI is a black hole sucking liquidity out of the real sector. Money isn't going toward road construction, healthcare, or education. It's going into a black box that promises miracles. But miracles don't happen. There's only a balance sheet, and that balance sheet is screaming red right now. We stand at the top of a mountain built of expectations. The view from here is magnificent. But there's not enough oxygen anymore, and the only way out is down. Let's forget about code for a moment and talk about the laws of thermodynamics. Because it's here, in the physical world, that artificial intelligence will run into a wall that money can't break down. AI is sold to you as an ethereal, weightless technology. The cloud. A beautiful word, isn't it? It creates the illusion of something light, airy, and pure. But the cloud is a lie. The cloud is millions of tons of concrete, steel, copper, and plastic. And most importantly, it is an insatiable, monstrous thirst for energy. Artificial intelligence is a vampire. It doesn't feed on blood, it feeds on electricity, and its appetite grows not linearly, but exponentially. Let's look at the numbers. One Google search is like a light bulb burning for a split second. One ChatGPT query is like that same light bulb burning for several minutes. The difference in energy consumption is tenfold, sometimes even 30-fold. Multiply that by billions of queries per day. Training a single large language model like GPT-4 requires as much energy as 1,000 American households consume in a year. And that's just the training. It's just school for the neural network. When it starts working, when it starts answering your questions, the meter spins so fast the bearings smoke. By 2026, the AI industry will consume as much electricity as the entire country of Japan. Think about it. An industry that has only existed for a couple of years on a large scale would require the energy of an entire country, with a population of 125 million people and a powerful industrial base. Where will we get this energy? They talk about a green transition, about wind turbines and solar panels. This is another lie. Renewable energy is unstable. The sun doesn't shine at night. The wind doesn't blow on command. A data center needs to run 24 hours a day, 7 days a week, 365 days a year. It can't wait for the wind to blow. It needs a base load. It needs a steady, powerful flow of electrons. The irony of fate. The technology of the future is reviving the technologies of the past. To feed AI, tech giants are secretly lobbying to extend the lifespan of coal-fired power plants. They're buying up old nuclear plants. Microsoft has struck a deal to restart the 3 Mile Island nuclear power plant, the very one where the accident occurred. They are ready to do anything for a watt of energy. We're reaching an energy impasse. The US and European power grids are old. They were built 50 years ago. They weren't designed to handle the sudden appearance of a hangar in the middle of nowhere, consuming as much electricity as a metropolis. In Virginia, home to the internet's digital heart, it's already impossible to connect new data centers. Power engineers say, there's no room, wait until 2030. This is the physical limit of growth. You can buy as many NVIDIA chips as you want. You can hire the best programmers. But if you can't plug a server into a power outlet, your AI is just a pile of expensive silicon. And this energy shortage won't just hit corporations. It will hit you. Data centers compete for electricity with you, with your home, with your factory, with your hospital. The laws of the market are simple. If demand grows and supply is limited, the price skyrockets. Prepare to have your electricity bills double or triple. You'll be paying an AI tax out of pocket just by turning on the kettle, and this is still a peaceful scenario. In reality, we're facing rolling blackouts. Situations where the choice will be stark. Either the chatbot works, or the air conditioner in the nursing home works. We have created a monster that we cannot feed. The smart planet we were promised has proven too gluttonous. The energy infrastructure is bursting at the seams. Transformers are exploding. Power lines are melting. Artificial intelligence promised to solve the climate problem. Instead, it's accelerating it. CO2 emissions from data centers are growing faster than those from aviation. We burn coal and gas to teach computers to draw pictures, while the real world suffocates in the heat. It's a dead end. And there's no way out of this dead end except strict rationing. Energy will soon be the new currency. And AI has a bigger wallet than you. You were promised utopia. You were told that artificial intelligence would take over the routine, that it would write reports, program code, answer emails, and you would be creative and sipping smoothies on the beach while algorithms earned billions for your company. It was the most expensive lie in the history of business. Welcome to the reality of 2025, a reality where AI hasn't replaced workers, but rather become their nightmare. Corporations have spent trillions on implementing copilots and intelligent assistants. Microsoft Copilot, Google Gemini, they're everywhere now. And what do we see in their financial reports? Explosive profit growth, mass layoffs and payroll cuts? No, we see chaos. Productivity hasn't increased, it's decreased. Why? Because artificial intelligence is an intern who suffers from hallucinations but speaks with the confidence of an Oxford professor. A programmer used to write code in an hour. Now they spend 10 minutes generating code using AI, and then 3 hours searching for hidden bugs and vulnerabilities that the neural network has thoughtfully inserted. A lawyer asks a chatbot to file a lawsuit, and then blushes in court because the bot invented non-existent laws. Instead of drawing, a designer spends a day explaining to a neural network that a person should have 5 fingers, not 7. It's called the automation paradox. The more we implement crude technologies, the more people we need to maintain them. Companies are caught in a trap. They pay millions of dollars for AI subscriptions. They hire prompt engineers with salaries of $200,000, but they can't fire their existing staff because someone has to check the robot's work. As a result, costs rise, profits fall, and AI becomes an expensive toy, good for writing anniversary greetings but completely useless for real business. But that's not the worst part. The worst part is the legal landmine the entire industry is sitting on. All these smart models were trained on stolen content, books, articles, code, and paintings for which no one paid the authors, and now the authors have come for their money. There are hundreds of lawsuits against OpenAI, Microsoft, and Google. Newspapers, artists, and writers are all demanding compensation. If the courts rule that AI training infringes copyright, and this is clearly the case, the bubble will burst immediately. The models will have to be unlearned. It's like trying to take the ground beef out of a patty and turn it back into a cow. Impossible. We are faced with a fact. The king is not only naked, the king is also a thief. The tech giants know this. That's why they're in such a hurry. That's why they're trying to sell you a subscription right now before the court issues a verdict. They created a solution in search of a problem. AI can pass the bar exam, but it can't negotiate. AI can diagnose a disease from an image, but it can't be held responsible for an error. In business, responsibility is everything. Who's responsible if an AI advisor recommends a deal that bankrupts the company? The developer? No. Have you read the user agreement? It says, "We are not responsible for anything." So, a human will answer. And if a human answers, why do we need this expensive, gluttonous, and lying calculator? The myth that AI will replace everyone is crumbling. Yes, it will kill low-level jobs. Copywriters, technical translators, call center operators, they're finished. But these aren't the jobs that create trillions of dollars in added value. The big economy is stalled. We bought a ticket for a spaceship and they slipped us a scooter with a pretty light. Investors are beginning to wake up. They see that the productivity revolution is simply cost inflation, and when they demand their money back, real panic will begin. This isn't about technology anymore. It's about the bubble bursting and how it will knock the chair out from under your savings. There's a saying called the Minsky moment. Economists call it the moment when a long-standing illusion of stability is shattered in a single day. Years of apparent prosperity, neatly stacked one on top of the other, turn into a giant pyramid. Then someone pulls out one small brick and the entire structure collapses. We have already approached the edge of this cliff. For years, we've been told that artificial intelligence is the engine of the next economic miracle, that all those crazy capital expenditures will pay off. But even the most cautious analysts are now forced to admit that spending on AI infrastructure already far exceeds real income, and the gap is growing every day. It's a classic bubble. First, everyone talks about a new paradigm. Then they start whispering, "Where's the money?" Then the whispers turn into screams. Imagine a typical earnings day. One of the Silicon elite releases its quarterly report. Revenue has grown, but not as expected. Data center costs have skyrocketed again. Margins are falling. Management is vague about long-term monetization potential. The market wanted a fairy tale, but what it got was a boring, dirty reality. Hedge funds are the first to hit the sell button. They smell blood. Stocks fall 10%. Stop losses are triggered. Robot traders, trained to follow trends, see the red cascade and start selling everything AI-related, minus 15%, minus 20%. Then margin calls come into play. Retail investors who bought shares on credit receive a call from their broker. Add collateral or we'll close the position. Most have nothing to add. The broker sells for them. The market is entering panic mode, and this is only the first circle of hell. The main holders of AI stocks aren't bloggers or crypto speculators. They're pension funds, insurance companies, and large asset managers. They bought into the dream of eternal growth. They believed the stories that AI would add tens of trillions to global GDP. They put your money on this dream. Now this dream is turning to ashes. When the dot-com bubble burst in the early 2000s, the losses were enormous. But the world was still breathing easy. Debts were lower, rates were softer, and the demographics were younger. The situation is different now. The system's debt burden is at a record high, interest rates are high, and the economy has already been weakened by the shock of the pandemic, inflation, and energy crises. If the AI bubble bursts with a dot-com-like magnitude, investor losses in the US alone could run into tens of trillions of dollars, with a ripple effect that would knock the global financial system off its feet. This isn't just a correction, it's a battering ram hitting a wall that's long been cracked. What does this mean for you personally? This means that your pension plan, which proudly lists tech leaders of the future, will one morning show you a hole instead of the promised golden age. This means that index funds, where AI stocks account for the lion's share, will drag the entire market down. This means that banks that provided loans for the construction of data centers and for AI company shares as collateral will suddenly find that their collateral has turned into virtual garbage. The financial system is already saturated with this risk. The debt taken on to build AI infrastructure is based on assets with a very short lifespan. Graphics chips become obsolete within 3 years. In 3 years, the hardware used to finance the loans will be worth next to nothing. But loans will remain the same. This is the perfect recipe for a banking crisis. We're not just repeating the dot-com story. We're combining it with the story of the housing bubble, adding a much more fragile, overstressed global context. When the illusion crumbles, there won't be a nice, slow correction. There will be a collapse. Funds will start selling everything to cover the holes. Gold, bonds, old economy stocks. Everything will be slashed to plug the black hole that has formed in the place of the Silicon Paradise. So you're sitting at home, opening your brokerage app and seeing a 40% loss on your portfolio in 2 days. Those careful investments you've been making for years to provide for your retirement have vanished into thin air. But the servers will continue to work. Chatbots will continue to respond. Models will continue to hallucinate texts and images. Only now they will hang in a digital vacuum, like signs on bankrupt stores. The silicon dream will burn away, leaving behind silicon dust. And in this ashes, you will have to figure out what value really is. Not shares of miracle technology, but real things that you can touch, eat, turn on, use, and pass on to children. The bubble always bursts. The question is not if it will happen. The only question is whether you can step away before the bubble's fragments turn your savings into smithereens.